I talk with all sorts of people about kind of the future of the US economy. I am commonly asked where I think the economy is headed, and I usually paint a pretty optimistic picture. And at least 50% of the time, I am met with, well, I completely disagree with you, and I think we are headed towards some type of US economic collapse, that the US has never been in a worse place. I often turn that conversation back around to the person and I ask them, okay, so if you're not going to bet on the US economy in this kind of global economic horse race that we've been running, who are you going to bet on? It's probably not going to be China. I'll link a video at the end about why I think that. And, according to this article here in the Wall Street Journal, it's probably not going to be in Europe either. They have been, struggling for many years, really ever since the global financial crisis in 2008. And we'll go through this article in a bit. Maybe India, kind of a rising star, but to be perfectly honest, it has not seen the growth that we hoped out of the last 10 to 15 years. Does it look like it has a pretty bright future for the next 5 to 10? Yeah, maybe, but are you really going to bet your life savings on the India economy over the US? I highly doubt it, right? So very often their opinion is, well, I'm just going to take it out of investments and I'm going to put it in cash. I say, okay, I understand. The problem with cash, though, is what do we think is going to happen if we go through some major economic collapse, right? We're not talking about like a 2008 global financial crisis, like a recession, the Great Recession, as they called it. We're talking Great Depression or worse, of, kind of a whole buckling of the economic system, US defaulting on debt, right? Revenues drying up, things like that. And in that situation, we kind of know the punchline of that, right? It's massive degradation of the value of the dollar, which leads in many different ways to effectively rampant inflation, right? Your money devalues in an incredible way that we have never seen here in the US, but we have seen all over the place. Look in South America, various countries in Asia that have gone through rampant inflation. So we kind of know what the punchline's coming. So if this major collapse is coming, it better happen soon, because your dollars, if they're not growing between now and when this collapse comes, the inflation is just going to be that much worse, in the fact that effectively you never grew your investments. Which gets to this point of like, look, I've only been a financial advisor for 10 years, and I've heard this since, I am not exaggerating, the first week I became an advisor. And I have other advisors here in the office that work with us in the business that have been in the field for 40 years. And the story has never changed, right? The US has always been on this verge of some economic collapse. And they will often use the fact like, well, yeah, but it's been 10 years, so it's going to be even worse when it comes. All right, well, it hasn't happened for the last 40. And we had a 2008 global financial crisis, and the economic system did not bundle. If you're like, yes, but debt, watch my videos on debt. I'll try and put a card up for it or something, right? The debt is not what you think it is. It is a problem right now. I'm not going to tell you it isn't, but it is often not the problem people make it out to be. So, right, okay, so we can't go to cash, right? Because we have to see some growth. If this looming economic disaster is there, or in my opinion, your only chance is to get as much money as you can before it comes, before this rampant inflation takes away 50, 70, 90% of its value, right? So, if it's not going to be stocks, is it going to be bonds? Look at what bonds have done during the last 2 to 3 stock market declines. In a low interest rate environment, which we have certainly been for the last 10 years, we're in this weird spot now where we're not. But in these low interest rate environments, they have just not provided the downside protection that people wanted. And I suspect we are headed back to a low interest rate environment, if for no other reason than that, kind of worry about the debt that is currently going on. So I suspect within 1 to 2 years, we are going to be back probably below 2% in the Fed funds rate. That is entirely speculation on my point, which means bonds are just going to behave the way they have for the last 10 years. I don't think they're going to provide that protection that you are looking for. All right, so people throw out gold a lot, right? So, well, gold does well in inflationary periods and during stock market declines, classically has done well. Well, I'm sorry, just gold and silver do not trade like they used to. They don't. Again, that's from like 80s, 90s, maybe early 2000s stuff. If you look at the performance of gold over the last 10 years, I just pulled up this little article, 1%. 1% annualized, right? US stocks did 12.5%, and then you see a lot of the other kind of stock markets haven't done well. or not as well as the US has in this kind of horse race. So like, it's kind of the same argument of cash. If this collapse is coming, you're right, this collapse is coming. It better be next year if you're going to invest in gold. Because if it's going to take 10 years and you're going to be earning 1% in gold, you might as well have just gotten that in your savings account, right? All right, real estate, right? Maybe we can go into real estate. And that's probably the best answer I've heard. However, especially because we've talked a lot about real estate and why it has continued to do well amidst high interest rates. However, the reality of demographics is coming for the developed world, in that the population of the US is not going to be going up that much more, right? Same thing with Europe, and that includes immigration, right? And we don't know what the real estate markets are going to do when population starts to level off, right? How many more homes and apartments are we going to need to be building in 10 to 20 years when population is truly leveling off, right? The population will be aging, which means there'll be more people that will need homes as we have less and less kids. But we don't understand how that's going to be. And when inflation comes, right, real estate is not immune to the effects of inflation, but real estate is a reasonable answer for it. So let's jump back to this article, right? On this idea of like, who are we going to bet on if it's not the US economy? This is talking about Europe's kind of stagnating economy. Here is GDP growth going back to 2012. So this is 2012 and 2013 over here on this side of the screen. And we see that they were still negative GDP. They're still coming out of the 2008 global financial crisis. Now, the US effectively kind of caused the global financial crisis. We also came out of it, to be perfectly honest, smelling like a rose. We killed it coming out of the 2008 global financial crisis, at least compared to everyone else in terms of getting our economy back online. Now, it cost us, right? We spent our way out of that recession, but it worked. If you disagree with the way that we came out of it, I get it. However, it worked better than most other economies, in my opinion, right? So, and then Europe, they've had some good years in here. This was, they had a really tough time with COVID and then did pretty well. Last year, they had kind of a resurgence. And I don't think this spells doom for Europe, right? I'm not like looking at these charts thinking, oh, Europe is done. No, they're just underperforming the US. Like, shocker, they have since World War II. That's just not news to anyone, right? So I don't buy this argument that there's some other place that doesn't have the weirdo political situation that we have going on with us, that isn't dealing with immigration or border control issues, that doesn't have this kind of weird populist left versus right movement that's happening all over the world, right? There's no shining example of some country out there that is crushing it through all of this, right? And at the same time, we have been dealing with stuff like this. I mean, you go back to like 2000, like when the like kind of modern crazy world started. I'm sorry, that's like, for American, that's September 11th, right? The world started getting strange and odd, around then. But of course, that's me talking because I was like a young adult at that time. I was 20 when September 11th happened, right? So for someone else, it probably seemed to start getting crazy when they were probably in their 20s, because that's when they started to like understand how the world has been happening. All right. When it comes to the politics, I just wanted to share this because the other conversation I have with clients is often like, how is the election going to handle this? So what the hell? Europe chases at America's protectionist tilt. Effectively, Biden administration has now repealed much of the protectionist, kind of agenda that Trump put in place around trade. And, this has been happening for a lot of different reasons. One was certainly COVID showed us the vulnerabilities of globalizing too much too fast. And like everything, politics, social issues, it's like a pendulum, right? We probably swung a little too far towards free trade and globalization. And after COVID, we've swung back and we're starting to more kind of try to protect our home industries and things like that. I mean, economists agree virtually unanimously that free trade is better for both countries, but not for every person in those countries, right? For example, if you make steel in the US, free trade is probably not that good for you because people can make steel cheaper in other places. So even though both economies will do well under free trade practices, it does not mean every single person in those economies will do better under those practices. So you have to try and strike a balance, especially when it comes down to things like national security, right? If we're buying all of our steel from China, it does pose a national security issue. We need to have steel production in the US for very important reasons, including globalization, deglobalization. So, it's not just this like economies will grow faster if we have more free trade. So I understand both sides of this issue. But the simple truth around the politics of this is that the parties are just not that far apart when it comes to economics, right? You look at the difference between their budgets, they're usually squabbling over tens of billions, like 10, maybe $30 billion over a $5 trillion budget. You're literally talking about fractions of a percentage, right? Their trade practices are not that far off. I understand the parties seem miles away on social issues. Their economics, there was another article around kind of tax cuts that are going through that are just sailing through largely. They're meeting a little bit of resistance from the Republicans right now, but they're kind of going through bipartisan. That's nowhere in the news because it's just not exciting when they don't fight. We only cover when they're at each other's throat. All right. The real takeaway here is I understand the world seems crazy, but my bet is still on the U.S. economy. Okay. I hope this has been informative. I will talk to you soon.